Real estate. It's one of the biggest asset classes on the planet. Traditionally, it's been seen as this super stable, solid, and, let's be honest, incredibly hard thing to get into. But what if all of that was about to change? Okay, let's get into it, because we're about to see how the digital world is cracking open one of the oldest forms of wealth there is: property.
For most of us, the answer to that is a huge yes, right? You walk by a skyscraper or a cool new apartment building and you think, man, I'd love to own a piece of that. But the road to actually doing it just seems impossibly steep. Well, that feeling of being on the outside looking in, that's exactly what we're going to talk about today.
For decades, that door to real estate investing has had some really heavy-duty locks on it. It's a huge, valuable industry for sure, but it has also been notoriously slow to change. So, let's take a closer look at what those locks actually are.
So what are these locks keeping everyone out? Well, first off, the massive upfront cost. You need a giant pile of cash just to even sit at the table. Then, your money is tied up for years. Real estate is famously illiquid. It's like your investment is frozen in a block of ice. And the process itself? It's just a mountain of paperwork, lawyers, and waiting, and more waiting. And on top of all that, you're usually stuck investing only in what's in your own backyard. These are the big problems that have kept that door shut for so many people.
But what if there was a key? A digital key that could just click and unlock all of those barriers at once? Well, that key is called tokenization. And believe me, it is set to completely flip how we think about owning property.
So what is it, really? To put it simply, tokenization takes the actual legal ownership rights of a physical building and basically digitizes them. It turns them into these things called digital tokens. Think of it this way. Instead of one single dusty paper deed locked away in a safe, you have hundreds or thousands of digital shares that are easy to manage and trade, all secured on something called a blockchain.
And this, right here, shows you the difference so clearly. Traditionally, it's one property, one owner, one deed, one huge investment. But with tokenization, it's one property, but many tokens. And that means you can buy small, fractional shares, kind of like buying stock in a company. And because it's all digital, these shares can be bought and sold on a market, which makes a famously illiquid asset suddenly way more fluid.
The engine that makes all of this go is the blockchain. Now don't worry, we're not going to get super technical here. The most important thing to know is that it's like a shared, unchangeable digital notebook. Every transaction, every owner, every single share, it's all recorded transparently and securely for everyone to see. You don't need a central bank or government office to approve anything because the network itself does the verification. That security and transparency, it's absolutely fundamental to the whole thing.
Okay, so we've got the what, but how does a real, physical, brick-and-mortar building actually turn into a bunch of digital tokens that you can buy on your phone? It's a really fascinating process, so let's break down the simple version.
It all has to start with the legal stuff. You set up a special legal entity that officially owns the building. Then, you get the property valued and you divide that value up. So let's say a building is worth $1 million. You could create 1 million tokens, each worth $1. Easy, right? Then those tokens are officially created on the blockchain. Now, the real magic happens in step 4 with something called a smart contract, and we'll get to that in just a second. And finally, the tokens are sold to investors who can then buy and sell them on a market.
Now this is the game changer. A smart contract is just a piece of code that lives on the blockchain and runs itself. You can program it to do things automatically, like send out rental income to every single token holder each month. Or it could manage voting rights on what to do with the property, or even handle the sale of tokens between people. It completely takes out the middlemen, all that manual work, and the chance for human error. It just makes the whole system super efficient and trustworthy.
Okay, so we get the what and the how, but why does this really matter? Why is this more than just some niche tech thing? Let's look at the actual, real-world impact this is having.
Just look at that number for a second. The market is expected to shoot up from under $3 billion today to over $16.5 billion by 2033. That's not just growth, that's an explosion. This isn't a what-if anymore. This is big money flowing in because they see a fundamental shift is happening.
And this chart just paints the picture perfectly, doesn't it? That incredible jump from just under $3 billion to over $16 billion. It shows you the huge confidence that people have that this technology is going to reshape the entire real estate world. So what's behind all that growth? Well, it's all the benefits we've been talking about. We're finally solving those old problems. The biggest driver by far is increased liquidity, the ability to easily buy and sell your piece of the pie. Right behind that is lowering that massive barrier to entry, letting way more people in. And of course, being able to pull in investors from all over the world and the built-in transparency of the blockchain, those are just huge, huge advantages.
And hey, this is already happening with some major big-name properties. In Aspen, a chunk of the super luxury St. Regis resort was tokenized and sold. In Zurich, a company literally used tokens to buy a high-end property. And get this, in Dubai, a massive developer is planning to tokenize at least $1 billion worth of its assets. These aren't little experiments anymore. This is the real deal. And this is where we zoom out to the really big picture. Because the ideas behind this technology, they go way beyond just office buildings and apartments. We are literally on the edge of rethinking what it even means to own something valuable.
So let's just pause on this for a second, because this is where your mind can really start to run wild. Just think about it. What if you could own a tiny little fraction of a famous painting, or a classic car, or a wind farm, or even a piece of the rainforest? The exact same ideas that apply to a building could apply to almost any asset you can imagine. This just blows the doors wide open for a world of investment and ownership that we've never ever seen before.
And really, that's the main takeaway here. Real estate tokenization is sort of the big, splashy proof of concept. But the idea underneath it all, making ownership divisible, tradable, and accessible to everyone through technology, that is a powerful force that could fundamentally change our relationship with everything of value in our world. The future isn't just about owning a home anymore. It could be about owning a piece of everything. The only question is, what piece do you want to own first?